This isn't just about beach houses losing value. It's the beginning of Florida's real estate reality check. Insurance is exploding, prices are stalling, and hidden cracks are starting to break wide open. Think your sunny Florida city is safe? You might want to check again. These 10 housing markets are flashing warning signs, and if you live there or plan to buy in 2025, this countdown could change everything. If your dream home suddenly lost $100,000 in value, would you hold or sell? Drop your answer below, because what's happening in Florida makes that a very real question. Fort Lauderdale still looks like $1 million postcard, but scratch even slightly beneath the image and the housing market tells a very different story. In 2025, listings across the city have surged by more than 80% compared to just 1 year ago. That's not a slowdown, that's a flood. Homes that sparked bidding wars 2 summers ago are now collecting dust for 90+ days. Sellers are slashing prices, and deals around $650,000 in 2023 are now struggling to fetch even $580,000. The glamour never left, but the buyers absolutely have. What's quietly killing Fort Lauderdale's real estate dreams isn't just demand, it's cost. Insurance premiums have jumped over 50% in just 2 years, and coastal properties now average more than $7,000 a year in coverage. Add ballooning HOA fees, many over $500 monthly, and affordability is out the window. Investors who once flooded the city during the pandemic are pulling their listings at a loss.
Cape Coral, once Florida's golden child of relocation, is now facing a sinking market. Home prices surged over 60% between 2020 and 2022, but the pace was simply unsustainable. By 2025, prices are down 5 to 7% year over year, and homes are taking 70+ days to attract serious buyers. But it's not just values, it's volume. Inventory has exploded to 4,000+ active listings, more than double compared to 2023. Those picturesque waterfront views aren't doing much when buyers are overwhelmed with options and developers are still pushing new builds onto an already saturated market. Even buyers who want in are thinking twice. Canal-facing homes come with sky-high flood insurance, now totaling $8,000 to $12,000 annually. On top of that, Cape Coral's infamous utility expansion fees, sometimes exceeding $30,000, are turning into deal breakers. The city's economy simply can't keep up, depending heavily on construction, tourism, and retirees, but locals are being priced out while newcomers dry up. Many investors who jumped in during the 2021-2023 frenzy are offloading their homes at a loss or walking away altogether. Cape Coral in 2025 is no longer hot, it's overheated.
Colla, long considered Florida's affordable escape, is quietly buckling under a massive housing pressure wave. In 2022, the city had less than 800 active listings. In 2025, that number has exploded to almost 3,000. New builds stretch across the outskirts, but many sit empty, with entire neighborhoods in Silver Springs shores turning into ghost zones. Homes that listed for $310,000 last year now struggle to move even at $275,000. For a city built on calm pastures and low-key charm, the real estate shift is anything but subtle, and few saw it coming this fast. Colla's downfall wasn't just overbuilding, it was overreaching. Developers saw cheap land and tried turning this farming hub into a suburban utopia, but demand simply didn't keep up. Local wages haven't budged, and now affordability is broken. The average salary? Just $47,000, against home prices still above $270,000. Insurance premiums have also doubled, despite Colla's inland location, thanks to the statewide insurer pullouts. For first-time buyers, it's a no-go. Sellers? Many are barely breaking even. What looked like a hidden gem in 2021 is by 2025 cracking under its own real estate weight. Tampa had its real estate moment, and it shined, until 2025 started exposing just how overheated the market really became. Inventory has rocketed to over 5,400 active listings, nearly double from early 2023. New condos, high-rises, and suburban expansions all collided with rising interest rates that now hover around 6.8%, spiking monthly payments by hundreds. That same house that cost $1,800 a month now demands closer to $2,600. With fewer qualified buyers and a flood of new inventory, bidding wars have vanished, and sellers are watching as properties sit longer than ever before. Tampa's correction goes deeper than price tags. Zillow shows home values are dipping monthly, and investor sentiment is crumbling.
Local agents report panic selling, with properties hitting the market 5 to 10% below 2023 prices, especially from short-term rental investors. Hurricane exposure is also a growing issue, with flood zone insurance premiums jumping past $5,200 for homes near the bay. Meanwhile, the average time on market in Tampa has more than doubled to 44 days. What was once the poster child for Florida's boom is now a case study in a fast-moving, multifaceted slowdown. Jacksonville, Florida's largest city by area, looked like the next big boomtown until the market flipped. In 2023, inventory hovered near 2,200 homes. By 2025, it's pushing 4,000, the most in over a decade. Builders got ahead of themselves, especially in suburbs like Orange Park and Middleburg, adding supply without matching demand. Mortgage rates now nearing 7% have priced out chunks of first-time buyers, and listings that once moved fast are sitting cold. Fitch Ratings estimates the city was overvalued by 26%, and the correction hitting Jacksonville doesn't look like it's slowing down anytime soon. The city's economic undercurrent isn't helping either. Freight volumes dropped 14% at Jacksport, leading to rounds of layoffs in shipping, logistics, and warehousing, shrinking buyer pools even further. List prices are dropping, open houses are going stale, and properties now spend an average 51 days on market, up from 21 just 2 years ago. Flood insurance spikes are chasing locals into smaller inland towns, while big institutional investors are pulling out. Nearly 1 in 5 homes listed in Jacksonville is investor-owned, and many are priced to sell fast. That shine around Jacks got dim quick.
We're only halfway through the countdown, and look at how many heavy hitter cities are already shaking. If your Florida hometown hasn't shown up yet, it still might. Hit subscribe and stick around, because the next 5 markets include some serious surprises. Sarasota, famous for white sand and wealth, now finds itself stuck in a real estate reversal. Over 3,700 homes are on the market in 2025, up from 1,800 just 2 years ago. Sellers aiming for $1.2 million now struggle to move homes priced at $975,000. Sarasota's luxury market got even more inflated than most. Zillow says peak values hit 38% over correct pricing in 2022. But with stock markets wobbling and fewer retirees cashing out, demand is cooling fast. And for a city that leaned heavily on out-of-state wealth, slower cash flow means slower closings. On-the-ground reports show just how far things have turned. Homes now sit for an average of 91 days, almost triple the 2022 pace. Agents are offering open house bribes with charcuterie boards and mortgage rate buy-downs, but nothing's moving like it used to. Waterfront properties are feeling the insurance pinch too, with premiums climbing to $8,000 to $10,000 a year, making vacation homes far less appealing. The luxury crowd is backing out, and locals can't afford to fill the gap. Sarasota might still be sunny and scenic, but its real estate market is officially in the shade. Port St. Lucie went from Florida's best-kept secret to one of its most dangerous housing overplays. Prices surged post-2020, but by 2025, the market can't pretend anymore. Data from Florida Atlantic University shows homes here are 41% over their long-term valuation, the highest in the state. Median prices hit $410,000, while household income barely cracked $62,000. That's not sustainable. It's a setup. Inventory is up 35% year over year, and new developments are still dropping homes into a buyer pool that's already drying out. Builders who once bragged about wait lists are now ghosting open houses. With infrastructure stretched thin and interest fading, the cracks are deepening. Roads are clogging, schools overcrowded, and residents are getting restless. Medium-priced homes in 2023 now list for $360,000 or less, and they still can't move. Sellers offer closing cost credits, stainless fridges, even interest rate buy-downs to get attention. Out-of-state buyers from the Northeast who fueled the boom have pulled back, and local buyers are priced out. Meanwhile, waterfront insurance is averaging over $6,500 a year, crushing cash flow dreams. For a city that once felt like the future, it now looks stuck in correction mode. Fort Myers became a housing powerhouse almost overnight, roaring to national attention between 2021 and 2023 with 65% home price jumps. But in 2025, that burst has blown out. Prices have dropped around 6% year over year, and the number of homes on the market has sailed past 5,000. During the boom, out-of-state cash offers flooded in, turning retirees and snowbirds into instant flippers. But fast money burns fast. Now those same investors face massive carrying costs, with homes sitting unsold for 60 days or more. The rush is over, and reality is setting in.
And it's not just sitting homes, it's bleeding inventory. Hurricane Ian didn't just damage property, it wrecked insurance premiums. Even homes outside flood zones now cost $9,000 to $11,000 annually to insure. Tourism is also slipping. Short-term bookings are down, Airbnb hosts are discounting just to survive, and revenue's drying up. Locals hoping to buy are completely shut out, with median incomes under $60,000 and home prices still too high for a meaningful correction to open doors. Fort Myers is still sunny, still beautiful, but what was explosive growth is now a market stuck in pause, with tension in the walls. St. Petersburg made real estate look effortless during the boom, charming, artsy, and always in demand. But in 2025, that demand is cooling off hard. Active listings have surged to over 5,600, the highest since 2016. During the rush, home values peaked around $450,000, but now many are scraping closer to $390,000 and still not getting offers. Nearly 1 in 4 properties this spring came with a price drop. What once moved on day one now sits for 48 days or more. The luxury glow has faded, and the market beneath it is wobbling in silence. The numbers aren't the only red flags. Sentiment is sliding too. Many buyers here were remote workers or short-term rental investors chasing dream lifestyles. But now Airbnb saturation has made hosting unprofitable, and waterfront insurance premiums, they're pushing $10,000 a year. Combine that with a median income under $58,000, and affordability looks out of reach for locals. Flood maps aren't helping either. Expanded zones are scaring off new buyers outright. St. Pete still has murals and sunshine, but in 2025, the real estate party ended early, and no one seems eager to clean up the mess. Lakeland, once the quiet underdog between Tampa and Orlando, has now claimed a different crown. Florida's #1 at-risk housing market for 2025. Listings jumped from 3,000 to over 4,800 in just 2 years. And in a city of only 115,000 people, that's a major red flag. Prices that peaked near $350,000 have started slipping month over month by 2 to 4%. Homes are being relisted under appraised value, and demand feels like it's evaporating. For every pretty suburban street, there's now a row of investor flips just sitting, waiting for a panic-driven offer or any offer. Lakeland's perfect storm wasn't just random. Builders went all in on suburban growth, assuming the boom would last forever. But with mortgage rates near 7% and buyers backing out, oversupply hit fast. Investor retreat is making it worse. 31% of listings are owned by landlords desperate to exit. Insurance premiums have risen 40%, even without a shoreline nearby. Combine that with a median income under $58,000, and affordability looks out of reach for locals. Flood maps aren't helping either. Expanded zones are scaring off new buyers outright. St. Pete still has murals and sunshine, but in 2025, the real estate party ended early, and no one seems eager to clean up the mess. If you found this breakdown helpful, make sure to hit subscribe so you don't miss what's coming next.